In the year 2024, economists project a global recession that could potentially dwarf the 2008 financial crisis. So begins our journey into the unknown, a future where economies across the globe may tremble under the weight of economic downturn. Imagine a world where jobs become as scarce as water in a desert. Envision the gross domestic product of mighty nations shrinking, a clear signal of economic distress. Now, picture the stock market, that towering monument of capitalism teetering on the edge of collapse. Yes, the global recession of 2024 could potentially bring about these chilling realities. It could send shockwaves through every continent, every nation, and every city. It could change lives, and not for the better. A frightening prospect indeed, but for the savvy investor, this could be a golden opportunity. Yes, an opportunity. Because, as the great Warren Buffett once said, be fearful when others are greedy, and greedy when others are fearful. Recessions may seem disastrous, but they have often been fertile grounds for astute investors. Let's delve into history and uncover some of the most successful investments made during previous recessions. Our first stop is the Great Recession of 2008. The world was in turmoil, financial institutions were crumbling, and panic was the order of the day. Amidst this chaos, Warren Buffett, the Oracle of Omaha, saw an opportunity. He invested $5 billion in Goldman Sachs, a company that was teetering on the brink of collapse. This move was risky, but Buffett's confidence in the long-term prospects of the company paid off. When the dust settled, Goldman Sachs not only survived but thrived, and Buffett reaped significant returns on his bold investment. But Buffett didn't stop there. In the same year, he poured $3 billion into General Electric. Once again, his foresight was rewarded. GE managed to weather the storm and emerge stronger, providing Buffett with another successful investment during a recession. These stories may seem exceptional, but they are not unique. History is replete with examples of shrewd investors who capitalized on the fear and uncertainty of a recession to make profitable investments. In the early 90s, during the savings and loan crisis, many investors found success by investing in undervalued properties and assets, turning potential losses into substantial profits. In the dot-com bubble burst of the early 2000s, savvy investors who had avoided the overhyped tech stocks instead placed their bets on traditional industries. And when the bubble popped, these investors were rewarded for their prudence. These stories underline a fundamental principle in investing. Fortune favors the bold. Recessions, while challenging, can present unique opportunities for those willing to take calculated risks. They force us to reassess, to rethink, and to uncover value where others see only despair. These stories prove that with the right strategy, recessions can be a goldmine for investors. So as we stand on the precipice of a potential recession, let's remember that every cloud has a silver lining, and sometimes that lining can be golden. Warren Buffett, one of the world's most successful investors, famously said, "Be fearful when others are greedy and greedy when others are fearful." This mantra encapsulates the essence of contrarian investing, a strategy that involves going against the grain of investor sentiment during periods of extreme optimism or pessimism. Understanding investor psychology is crucial here. During periods of economic downturn, fear often takes the wheel, causing investors to make rash decisions. They might sell their shares hastily, leading to market overreactions and undervalued stocks. It's like a sale at your favorite store, but instead of clothes or gadgets, it's shares of companies that are up for grabs at discounted prices. Let's delve into some real-life examples. Remember the dot-com bubble of the late 90s? As the bubble burst, many investors, gripped by fear, sold their tech stocks. This led to a massive market overreaction, causing the prices of tech companies to plummet. However, those who were able to see past the widespread panic and bought into these undervalued stocks, such as Amazon or Apple, were greatly rewarded in the following years. Similarly, during the financial crisis of 2008, the housing market crash led to a widespread sell-off of stocks. Yet, those who saw past the fear, like Buffett himself, seized the opportunity to invest. Buffett's company, Berkshire Hathaway, made significant investments in companies like Goldman Sachs and General Electric, reaping substantial rewards when the market eventually recovered. These examples underline the power of fear in investment and the opportunities it can present. Fear can drive people to irrational behavior, creating market inefficiencies. These inefficiencies, in turn, can provide savvy investors with the chance to buy valuable stocks at bargain prices. So, the next time you see headlines about economic downturns and market crashes, instead of joining the panic, remember Buffett's words. Consider the potential opportunities that might be hiding in the midst of fear. When the majority is selling out of fear, that's often when the biggest investment opportunities arise. If you're waiting for the recession to hit before investing, you might be missing out. This is not a mere conjecture, but a proven strategy adopted by some of the most successful investors of our time. Let's take a walk down memory lane to the Great Recession of 2008. While the world was panicking, a certain investor was calmly making his moves. This was none other than Warren Buffett, the Oracle of Omaha. He saw the crash not as a disaster, but as a golden opportunity, and invested billions in companies like Goldman Sachs and General Electric. Today, those investments have yielded him extraordinary returns. This is the power of foresight in investing. It is about seeing the potential in adversity, seizing opportunities when others are blinded by fear. By investing before a recession hits, you get to buy at lower prices, and when the economy recovers, you reap the benefits of high returns. But why is investing now so important? Well, the best time to plant a tree was 20 years ago, the second best time, today. The same principle applies to investing. The earlier you start, the more time your investments have to grow. Consider the case of Peter Lynch, the legendary manager of the Fidelity Magellan Fund. He believed in the concept of buy what you know and invested heavily in consumer stocks during the early 80s, a period of economic uncertainty. This early investment strategy yielded an annual return of 29% over the course of a decade. In essence, investing now allows you to take advantage of lower prices and the potential for high returns. It's about being proactive rather than reactive. It's about making the market's volatility work for you rather than against you. So if you're sitting on the sidelines waiting for the perfect moment to jump in, remember this: the market doesn't wait for anyone. And by the time the recession hits, the opportunities for maximum gain could very well be in the rearview mirror. By the time the recession hits, the best opportunities may have already passed. Investing during a recession requires a different strategy than during a booming economy. The tide has turned, and the sun-drenched days of easy profits have given way to a stormy sea of uncertainty. But fear not, for even in these tumultuous times, there are ways to navigate the storm and find safe harbor. Firstly, consider diversifying your investments. This classic strategy is even more pertinent during a recession. It is akin to not putting all your eggs in one basket. By spreading your investments across different asset classes and sectors, you can mitigate the risk of a single investment damaging your overall portfolio. Secondly, focus on long-term growth. Recessions, though daunting, are temporary. The markets have historically always bounced back. As the wise investor, you should be looking beyond the immediate downturn and instead focus on companies and sectors that show promise for long-term growth. This requires patience and a bit of fortitude, but the rewards can be substantial. Thirdly, invest in recession-resistant sectors. Some sectors, such as utilities, healthcare, and consumer staples, tend to hold up well during economic downturns. These are industries that provide goods and services people need, regardless of the state of the economy. Investing in these sectors can provide a measure of stability to your portfolio during a recession. It's also worth considering bonds, particularly government and high-quality corporate bonds. These can offer a steady stream of income and are generally considered safer than stocks during a recession. Lastly, keep a keen eye out for opportunities. A recession often brings lower asset prices, and with it, the chance to buy quality investments at a discount. It's a time when fortunes can be made by those who dare to seize the opportunity. Remember, the key to investing during a recession is not to panic. Stay calm, stay diversified, and stay focused on the long term. With the right strategy and a keen eye for opportunities, you can turn the impending recession into your own golden opportunity. The 2024 recession may seem like a threat, but for the savvy investor, it's a golden opportunity. As we've journeyed through the investment landscape, we've learned that history has a way of rewarding those who dare to invest when others retreat. It's during these moments of economic downturn that the seeds of incredible financial growth are sown. We've delved into the power of fear in investment and how it often leads to missed opportunities. Yet, when we harness it as a tool rather than a deterrent, it becomes a compass guiding us towards potential wealth. Now is the time to invest, and the strategies we've discussed can help navigate the uncertain waters of a recession. In the wise words of Warren Buffett, predicting rain doesn't count, building arcs does. So let's start building our arcs, using the knowledge we've gained today as our blueprint. Remember, as Warren Buffett said, be fearful when others are greedy and greedy when others are fearful.